Hey guys, what is going on? So I'm just testing this out. Let's check if we're live and we should be good to go. So exit connection, cool. Wicked. Yeah, so let's just wait for people to join so we can continue. Give it a second. I'll be right back. Amazing. Let's have a look here. So, nice. Nice. Cool, brilliant. So yeah, let's jump straight into it. So let me minimize this. And we can begin. So, as we know, we've been seeing quite a lot of development across a lot of these currency pairs. What I'm primarily looking at right now is a lot of potential long continuations, but also bearing in mind that we have some US related news which could be taking place over the course of November. So we don't want to be too loose with our long-term trades at the moment. So that's something that I'm going to be bearing in mind. So if I go over to something like the DXY, and let's break that down. So first of all, what I do like about the DXY is extremely important. Let me just quickly see if I can add something over here. Give me a second. Hey Zephyr, happy Sunday. Habibi, yes. Right, wicked. Let's just trying to add something on top of this. So if I put it like this, and I'll put overlay plus. What does that do? Hold on. Okay, that did nothing. All right, and I was just curious to what the hell this was. Go back. Have I? Last time I had the camera up, I'm not sure how I put my camera up, but oh, I see what's going on here. So if I just maximize this screen here, and it should be in the case of flipping it orientation wise. Brilliant. Okay, cool. And so just took the long on BTC onto override. Nice. Last week was great for me. Break even on my account. Nice, man. That's actually really nice to hear. I mean, getting to break even is a massive achievement. Holding it at break even is an even bigger achievement. So I'm definitely really happy for both of you in that sense, because trading to break even is one thing, but actually holding that break even is a different, and then basically composing yourself to move forward. All right, you know what? I can't sort it out now, so I'm just going to leave it and let's just proceed with the webinar, the video. Let's see, does that move? Yep, brilliant. All right, sweet. So let's have a look at that BTC trade. But first of all, I'm just going to go through DXY. So Obviously this week I haven't been really mainly focused on trading, in the sense I've just been kind of following the charts when I've had some free time. What I am looking at on the DXY, probably same as you guys, is price came in, tapped into this little point of liquidity here. We do have a little bit of a gap there, but it's negligible right now. We don't really have to come and fill that, so that's completely fine. We've responded from here, and then we've now pushed away, and I think that is pretty much more than enough for us to potentially see this continue higher. Or what we might see is it comes and just fills that wick one more time and goes. So that's kind of something that I'm keeping an eye on. Where it's going is clear. I'm just going to go back to the 4. What I do like about this on the 4 hour is we can see that, you know, we have the high here, we have the gap there. So we have all of that space to just really rapidly move. So if we can get positioned for the long at the right time, and this does go long, odds are if this is coming up, it's probably just going to make its way higher. And over there, it's like, you know, there's nothing really stopping us from just really moving. So we don't have to get corrective. And even if we do, we're probably going to just keep moving towards those highs. So that's one of the strong positives about getting positioned on the long with the DXY right now. If I do go down to the 1 hour, what I do also like about this is that when you do look at it, say that's the base, right? It doesn't need to really come back down into those areas, but arguably it's really kind of retested that anyway. It's tapped into the base, created the second bottom. It's then had its top, had its second top, came down. And the nice thing is this was then just the footprint. This became the original 1. That's the 1, that's the 2, that's potentially your 2. And then what's happening here is either 2 things. This is now your middle section where this can either be a 2 touch or arguably a 3, right? With all of that in place, but it's not necessary for it to come back down because it's done more than enough. So with all of that in place, because we have our 2 tops and 2 bottoms, we're already positioned in for the long. So that it's just now a matter of, is there enough liquidity for it to go? When I look at this, this is definitely looking like a middle section of accumulation. So what we want to do is kind of get a little bit more granular with a trade like this. And then I'm going down to the 15 because everything's there on the 4 daily, the 1 hour and the 4 hour, everything is there. I'm then seeing it like this. Well, what if that's your tap into these areas? So that's, you know, that's done its job. This has created its highs. That's done its job. This is then a part of the middle section where you've had your 1, 2, 3. So that's done its job. And then on top of that, now with the cherry on top, you've had the push away and then you've had the accumulation and then that goes. So for a trade idea like this is pretty good. But in terms of clean trades, honestly, it's not the cleanest, but it's there. And I'll tell you why. I'm just going to clear this off so you can kind of get a bit more clarity on what I'm looking at. So I'll zoom in a little bit closer and I will use some straight lines rather than drawing them on. So if I just put this on here and then I also put this on there and then I mark it up here, right? So what you can see here is very clear. You've basically got your little footprint section there. You've got your sort of squeeze into it. That's your middle section. That's your 2 touch. So at this point here, then it makes me think, do we necessarily want to see a 3 touch of this size here? No, we don't. So would a 2 touch be sufficient? Absolutely. Even if we said we took our point from here, right? Even if it came back down like this, that wouldn't be the proportion of a flag to that impulse that I'd be looking for. So I would be I'd be put off by a flag that size. But right now, with all things added, the current price action of this is good enough. And the fact of that being good enough, we could actually potentially see that as a move. Now, if I go to the 5 minute, we can then see, okay, right, so even though, if you want to argue, you know, this is not your cleanest price action, you can still make due of what's there. So in terms of price action, if I take an entry there, even 7 pips covers me to low. So even if I took 10 pips at this point, I'd still be positioned pretty well for this move to go back to its high. And then I could manage that for about 2 to 1. So with a trade idea like this in place, it's not so bad. And then the nice thing about the stop positioning is, even if in the worst case scenario, this did develop, right? And it did something like this where it made its way higher and came back down and you were away from the charts and it did that. and it went right, for whatever reason, you'd still survive that because your stops is positioned below that line there. So it's a pretty decent situation to be in to take along from here. Again, like I said, it's not going to be your go-to trade setup because at the end of the day, you don't want the majority of your trades on your trading journal to look like this. But in terms of a trade thesis and a trade idea, I think everything is there. So that's just basically it on the DXY. I mean, looking at this for longs continuations, going back to the 4 hour, you know, we can see clear as day. What do we have here? Well, prices situated in those areas, it's done more than enough. So from that perspective, I'm kind of happy with the trade idea to go long. And then if it is a loss for whatever reason, then we would get a clear message from the market where this comes back down here, and then we'd probably get positioned in those areas to get long again. So you'd be able to take the loss, but then get positioned again, and then essentially it's probably going to be a pretty decent one where even if you took your trade in there, stop loss below, you know, you're still walking away with, even to the top of this, about a 2 to 1, 2.5 to 1. So you'd make up your loss anyway in that scenario. It's just right now would be more of an aggressive play because we are early in the week. Could develop a little bit more, we don't know. So we'd have to be a bit more patient. Also, the one thing that I don't really like the most is the fact that this was on the Friday. So was the Friday just selling off for no reason? But then New York session, we opened and we started pushing higher, but now we're in the corrective phase. So going into New York today, we'll get a clear message from the market. If we're going to go, it's going to be New York session, really and truly. If we're not, then it's probably going to pull down, and then we'll get a re-entry maybe around about London session the next day, or even New York if it takes longer. Let's have a little read of these messages. So BTC, I'm going to have a look at that in a second. Lots of potential file plays. Hello sir, do you have Telegram? No, I don't actually. So I don't really intend to sell education or sell signals or anything like that. I'm just kind of happy to kind of help and share my perspective and kind of grow with you, opposed to trying to teach you how to trade and manage you in that sense. Because don't get me wrong, like, I think there's different types of people out there. I think some people, they want to make their money through education and stuff, but you know, right now I'm not at a place in my journey where I want to be dedicating too much time to a mass amount of individuals where, yeah, sure, I could do that and I could probably help you become profitable a lot quicker. Don't get me wrong. It's just, again, sometimes you have to be a little bit selfish and you've got to think about yourself first. So build your own capital up, acquire that position, and then when you're at that level of positioning, you can kind of make a decision like, you know, what do you want to do? You want to take on some people for mentorship and so forth, but at the same time, it's not always necessary. But these are the reasons why I do the live. Like, if you have questions or you need guidance or some help, I'm more than happy to kind of step in and kind of fill in some gaps for you. At the end of the day, share my perspective, which I think at the end of the day could probably translate into what you're looking for anyway. I just think that with a lot of people looking for mentorship, it's just too expensive, really and truly. Like, somebody's time can cost way more than you anticipate, that one-to-one time. So BTC, I think this is what we were talking about on Instagram, Zephyr. So I'll clean this off quickly. So yeah, this is clear as day right now. I mean, what I do really like about this is we've basically tapped into this as a base. That's basically acting as a base. We've then got this as its own piece of price action here. This was its own piece of price action here, which arguably you could say it retested when it came down with the next piece of price action. And then, of course, this was, you know, its own piece there. So again, it's nice in the terms of a pattern separation because it's showing multiple structures on its way. So I think when you look at it and break it down like this is really what we're really playing. But obviously you have to remember, at the end of the day, a lot of these things can develop, because what you have to understand about this is it's not your typical move where you've basically had, you know, correction, push up, another correction, a push up, small correction, push up. correction, impulse. What we've actually had here is we've had the correction, push up, small correction. So this was your impulse, correction. That impulse got smaller and then it got corrective again. So this became very corrective, where previously we didn't see that as corrective. What we did see was after we had, you know, the structure like this, for example, we had a strong push away. In this sense, we haven't really had that extreme strong push. And at this point, I think this is where BTC is getting a little bit more expensive for the average retail trader. So they have to be trading on micros and whatnot. And I think for that reason alone, a lot of people are skeptical about scaling in too large right now. Not that people don't have money. I think people do have money, but it's just the people who have money are probably highly like long-term holders or probably investors who know what they're doing. So the reason why I'm kind of seeing this stalling a lot is either this is one large piece of accumulation for something else, where, you know, we end up seeing something like that, and that becomes a middle section and it comes up again, and then next thing you know, it just does it again, and then it just runs its way up to the upside like this, and it just keeps doing it. There's a few variations, but it's just right now I don't really see it showing enough for me to be like, yeah, this is BTC, it's going like this, just because of how price action has been moving. So I'd be a little bit more cautious with BTC, but I think a long is extremely strategic and smart, especially if you got positioned in those areas there, because you'd basically be playing it for what it is, right, in terms of the pattern separation, and then you would basically not overthink it, and you'd be like, yep, okay, so we've got first continuation, second, third, and then you're looking for fourth, and then you just keep playing the move, keep playing it, and then that's your fifth is up here, and so forth, and you keep going to the upside. So that's how I would really want to be seeing it go, but at the end of the day, you know, only time can tell. Let me have a quick look at these messages. All right, so let's go 1 hour. So let's have a little look at that trade. So I did really like the trade idea here. Yep. So we've basically got to see it like this. We are trading within this range. If we start breaking above and create continuation above here, that's going to be enough of a clue that we're going to be looking to go long, and it's probably going to start moving aggressively. Right now it is kind of trickling into those areas there. So you want to be a bit more cautious, because it could just keep, you know, doing something, creates this, and then eventually makes its way here. Where again, this wouldn't be the proportion of a 1, 2, 3 that I'd be looking for. If it did this, right, and we got there pretty quickly and price just rapidly moved up here, that would be the scenario that I wouldn't be opposed to, but I'd be very conscious with, because then you have more for proportioned 1, 2, 1, 2, and then you've got your 3 touch. This then has a bit of a phase 1 correction, phase 2 sort of situation, and then you're up here, and then at that point there you have to be conscious of, if that comes back down and gives you continuation there, that could just aggressively sell off, and then, you know, you're still within the short range. So the longs really come into play once we start breaching these areas, but again, it's one of those tricky ones, because you're going to then get positioned for longs halfway through the range. So strategically placing yourself down there and holding is the best bet. Strategic placing yourself up there and holding is your best bet. Again, we just want to see it rapidly move. If it rapidly moves and continues, great. You don't want to just be getting in and out of these trades. You want to be kind of holding it and playing the run. So for example, you know how we had the completion of this over here, you'd get positioned over there and you'd hold despite it coming in here, rejecting, coming back down a little bit, and then coming up. You'd basically be holding it, and you'd be waiting for that countless amount of times. We have it over here now. Over there, you'd be getting in, you just hold and you'd wait, and the price would come here. Maybe it would dip and come back up, but that's the part of the game that a lot of people miss, and they're just trying to get an intraday in there, get in and out, in and out. And sure, you can make some money, but I think where, you know, you make the real portfolio turnovers is that level of patience. You know, there's two ways about it. Some people, they want to get in aggressively, they want to get in and out, in and out. I just think that the time where I would be looking to be a bit more conscious is if I've got involved, even in these areas, or even in those areas there, anywhere within this period here, I would want to be conscious about this area here and see how we respond, and then I'd be out in the market around about there. So, you know, again, it's one of those ones where you'd have to build that patience to understand, based on structure, what's developing. I know where I'm going to be getting out if something like this happens, and then I know how I'm going to survive it. So then if price pumps through it, it's a great sign. There's a possibility it can come back down at some point and retest this area, but the odds are it's going to continue going, and then we're going up to the next point. So then I don't need to mismanage my trade. I can be very lenient and loose with it and put my stop loss down here, and then when it creates that low there, I can just wait for it to break the high, and then I can put my stop loss halfway. You know, you can be a bit more creative with management in them senses. So that kind of shares it. I'm hearing a lot of talks on XRP at the moment, so I'm going to have a little look at that. And there's a lot of social media going around on XRP, how it's going to now get combined with some a lot of, I don't really know too much about it, but I heard there's going to be a lot of combination with XRP and US dollar and digital currencies, and a lot of things going on with XRP right now. So right now XRP would have been a phenomenal investment in those areas. Truly, when it kind of tapped into that would have been a phenomenal investment. Doesn't really matter if it hasn't triggered you in on a trade like that, because odds are if this is still coming back down, then we could just see a sell-off and it comes back down. I think anywhere around about 1,000 is a great investment on XRP because of the higher time frame positioning on cryptocurrencies as a whole. I think there's a lot of people trying to get involved on XRP, so I think a crash on XRP is very unlikely, but I think a decline in value is likely, perhaps over November, and then we come into late November and we just see it completely spike. I think there's news around the 22nd of November. That's the one that a lot of people keep their eyes on. Let's look at my recent just reading messages. So let's look at my recent long to, it's in, okay, so let's see. The recent long was on BTC, right? 2 hours ago. Let me just clear this off. Yeah, no, that's solid, man. 2 hours ago, okay, fair enough. You took it at a reduced risk. I mean, yeah, do you know why I like this trade a lot as well? Is if we just look at it as the macro picture, just isolating this bit of price action here, what we have here is you have that little bit of correction, and obviously it's so clear as day. Where is that going? Well, it's going to come back up to those areas at some point. So getting positioned in here is a great idea to then trade it into that area there. So yeah, I definitely see that trade. I think the only thing that could really happen is if the market decides to mess around and the market just kind of just sells off on you a bit, comes back down here, retests and comes up. That's just one of those unfortunate scenarios where you couldn't trade against, you couldn't, you know, mitigate against that entirely. But I definitely think the trade idea that you took is good. So yeah, even so, any candles within that area would have been decent because the risk reward is definitely there. Even if you took it on that candle there, which I assume, and you took stop loss around about there, you know, managing it into the first point there, which isn't even the target. The target's all the way up here. So, you know, you're still walking away with 6-1 if that trade is the one to go. And I think that's the most cleanest and best trade within this whole run so far, besides, you know, the high risk one at the bottom. So yeah, I definitely like that trade. I think that's a really, really nice trade. Entirely. I think you could manage that easily for a 6-1. And then I would just, it depends, if it's on funding, I would probably get out around about 6-1 because that would push you up pretty decent on your account. I wouldn't be saying, okay, this would be the trade to get me out of my assessment, blah, blah, blah. I'm going for 17, 18%. Like, stacking those 6 to 1s, 3 to 1s, 5 to 1s, those are the ones that's going to make you pass your assessment and build that sustainability, not the 1 off 15% that passed your assessment. Let's go back to currencies. So let's see, please. All right, so Abdu's trade, right? The long on BTC. His one was very simple. His trade idea was really simple. Now, if I take this bit off, remember what I said about the high time frame, right? It's so important, right? In terms of the pattern separation. What you have here is you've got your override low there, okay? You know that if we're high time frame, we're looking at BTC longs, we know that's very valuable. We can see when price came here, it left a gap, okay? It left a gap to this section. It came up and created first top, second top, and then it came down after you created your footprint, the subjective first touch, and then the clear near miss, right? After you've had your near miss, what happened? We came down, we smashed through it, right? We smashed through it and we came back up, showing that price broke to the downside to tap into liquidity to then make its move higher. The confirmation that there was liquidity is when price came up, right? It's showing that there's a massive response to that area. What would show that there wasn't a response if that just sold through and came to the next area and did particular what we saw there, but at the bottom there, because then it's hit every single scenario in that whole section. So that's one thing to bear in mind. So then when you look at Abdu's trade idea, it's very simple, right? You've basically got footprint, you've basically just tapped into it, then you've got a near miss, and then you basically washed it out at that point there. So it's really done everything it needs to in terms of that value area there. So then when you go down to the 4 hour, if we look at the actual trade idea, he's understanding what I've just explained, where it's tapped into all of that. Even if you take this little bit of liquidity there, it's tapped into that as well. So the only other place, if he was wrong, it would be down here. So then he'd just have to wait patiently for price to come all the way down there, tap into that, and then he'll do the same thing again. So his trading plan was very simple. His trading thesis, trade idea was very simple. He basically just waited. He had his signal confirmation at this point where price has broken through the low, which is increased probability, and then it broke up, and in a great way it washed out with this nice candle, and then what happened is the next candle was following through. So if you look at the next candle, which is just there, that was basically your follow through candle. Now I think borderline, if I measure that up, yeah, it wasn't 50%, which is completely fine, right? Because at the end of the day, the washout is kind of negating the idea of it having to be perfect. Anyway, so now I'll go down to the 1 hour, and then you look at the trade here, right? What's happened? You've basically, you've tapped in and washed everything out there. On the hourly, you have got arguably a morning star, right? But we don't need to worry about that. What's happened is we've left this bit of liquidity, and we've basically stalled in a high value area, but we've stalled in the positioning of long continuation. How do we know that? Well, here's the clues. After we broke the low with momentum, we failed to continue, and then we came back with momentum, right? But within this momentum, we had a lot of correction. Price stalled a lot. Why would price stall there? Well, in the terms of psychology, price is stalling here so the bigger players can get positioned in there whilst everyone is thinking this is going short. So they're trying to short this heavily. The bigger players are now understanding that, okay, while we've got them on the side of the psychology of this is selling off, we can start buying them up. So everyone is going to be trying to sell. They're going to stall the price, confusing people, thinking that this is just going to be another continuation. You know, this is coming here, it's stalling. Even if it comes here, I can get protected above there. You know, all these little variations of all these different traders trying to get in with their different strategies, RSI, oscillators and stuff. It's all manipulated at this point. I'm pretty sure even if you checked it around about that point, they probably look very bearish. So they're all trying to sell it. And then what happens is Price comes here, does a very basic price action pattern, taps into this area here, and then it goes. You would have then been able to just decipher that. You don't even have to get very clear with it. You can see what price is doing, right? Price is just hovering within this area in terms of accumulation, AFT strategy wise. We broke the low, we came back up, insurance entry, and we go. And that's what he's playing. He's playing the trade idea. He's not just playing perfection here, he's playing the trade idea of it's done everything it needs to from the high time frame down to the 1 hour. I can see it clear as day. I can just take full advantage of a trade like this. And then he's just positioned himself strategically. And he understands if he was wrong, then the odds are this develops, it comes down, and then it develops into something like that. And then he just takes that short and continues going short with it, right? And then he would have get repositioned on that to then play the continuation short, and he would have got positioned in the short there, and he would have continued waiting. I mean, what a lot of people don't see as well is how much waiting did Abdu have up until the point this trade came about, and he had to sit on his hands for a long period of time. And that's basically it. I think that was the best takeaway for most people to come to realization with, is in order for him to catch this trade, how many trades did he have to consciously just either stay out of or just be patient with, to then wait to see a trade like this where he knew he could take full advantage of it. And it's when you master that, I think you really start meeting high levels. Yeah. Let's go back. So let's, oops, apologies. Let's see, let's go through the Aussie pairs. Actually, you know what, I'll go backwards. Let's go through the US dollar pairs and we'll make our way up, because I always go through the Aussie pairs first. So let's have a little look. So yeah, this is definitely climbing, which makes a lot of sense. This is climbing, making its way higher. I wouldn't touch anything in this area right now. I would wait for price to do whatever it needs to do. Even if it does that, I would still just wait, let price come back up, just see how price responds to this area. If we come back in, we might see short continuation in those areas, and that would be something that we'd be looking at. So right now I'm not looking at it for anything in particular, but if we did come back and revisit those areas there and we kind of came back in like this, I would potentially look at a long here to then play it back into those areas, to then potentially play a short later, right? Because then that kind of becomes more of an expanding in those areas, which kind of works as a reversal. This is corrective, and then you're basically playing that to then take advantage off the short, and then you're basically playing the short back to the downside if that's the play really. So that would basically be a pretty decent one on USD yen. USD Swiss. USD Swiss is decent. Again, it's got a bit subjective. Oh, I do really like USD Swiss. Let's have a little zoom out on it though. Go to the 4. Yeah, nah, it's one of them ones. I think it's similar to what we're seeing on USD yen. We do have a gap down here, so the odds are this could probably get filled at some point. 4 hour wise, we basically had a bit of a V shape where we've basically just come to that point. Now we're consolidating sideways. So I would wait. Personally, I wouldn't even try to get involved anywhere above that. I would wait for this to decline, give me some continuations down there, and then I can basically play it to the downside. It's higher probability to get something in there because you basically you can manage it into this point, you can then manage it into the next point, and then you can manage it into the next point. I like that. USD CAD. Man, I've still got a lot of drawings on my charts on me. USD CAD. Yeah, USD CAD as well. It's a tricky one, to be honest, because it's not clean. It's not clean price action right now. It is messy. We're seeing a bit of correction there. Let's have a little look. We've got it here. price could just be messing about in those areas before it goes. Yeah, I would leave USD CAD alone out of personal preference, just because I don't know what type of structure we're dealing with. We are in a value area though as well. We have to be conscious of that, but it's how we're kind of sitting in that area that is going to be telling us a lot. So if we create more continuation there, we get a clear structure there, that'll be perfect. If we follow through to the downside and we get something that would be good, as long as it's not coinciding with something to the left. But we just need to kind of see and evaluate when we get there. But something like that would be great, because again, we can see that how correctively that's come back up. We know with a lot of talks of US dollar crashing as well, that's something that we want to be on the ball with as well. So we might just see strong declines like we saw previously, I think beginning of this year as well, like where we saw these massive DXY shorts come into play. We might see some continuations on that now after all this accumulation and sideways movement. We might see big sales come into play. So something that I would be ready for as well. And if you're not prepared for the market just rapidly selling off at some random point, you should just kind of go over previous price action and just analyze it and see how would I have taken advantage of it. What could I have done? Maybe if there was no entries on the DXY, exactly, I could have taken advantage on some of the related pairs. How did the related pairs respond? Did they give many entries? They didn't. On the terms of a momentum play, was there anything I could have taken advantage of? Well, then you can figure out how can you pivot your strategy or your approach, and you can take it from there. I mean, don't get me wrong, you're not always going to be able to catch every single little price action pivot, but you should be prepared for different market cycles. And just bear in mind that a very impulsive market cycle is due. So if that comes into play, just make sure that you're ready. That's all I'm going to really point you in the direction for. Let's have a little look. So we have NJ. To be honest, NJ is looking solid, but it would need continuation. I think I would need to see some development now for the next move higher. I'm going to be waiting for this one. I'm going to be looking for something more in the signs of that is your low, and then price makes its way. It comes in, taps into that section there, maybe even comes a bit lower and retests, does whatever it needs to, but that would be the area that I'm looking at for the longs. And then I basically look to play that back up, and then I can manage it into those areas. In terms of a long position though, what would we be looking at? We'd be looking at roughly around about even with, call it a 20 pip stop loss, which is more than needed. A 20 pip stop loss would easily give me around about 5%. I'm happy with a trade like that overall as well. And then even to the high of this structure, I'm still managing for a 2-to-1. So I'm pretty happy with that. I mean, overall, I'd be playing this for about a 7.6, probably a 7% trade to the upside. It will probably take its time to get there by the end of November, most likely. But again, still a solid area to get positioned in. There was a trade just below it, which you can see. I think a lot of people did notice this one as well, which was here. That was a really nice trade in itself. You could have got positioned in there a little bit more aggressive. Probably even, arguably, you could have got out with a 15 pip stop loss. Borderline, and then yeah, you'd be still be in here, but you'd be managing for about 8-to-1 to roughly 11 to 12-to-1. So yeah, it's not a big difference to even getting involved in the next trade if it shapes up. Solid trade. There was another one in down there. There was just loads of trades. So yen pairs definitely came through. NU. So NU's actually one that I've really been keeping an eye on, and basically I would be in for NU if it wasn't for this being a bit crazy. Just the daily, I'm a fan of it. I just want to see how the daily closes, really and truly. We've squeezed into this, which is nice. Surprised no one even mentioned NU actually. I've got AU as well, but you know, you can see how we've squeezed into this. The negative is the base. So it's not really, it's a steep structure. There isn't a clear second bottom base at this point. So then it just makes me argue the point that is this undeveloped? But then I go down to the 4 hour and I'm like, do you know what? It's got everything that I need it to have right now. It's got pattern within a pattern as well, you know. So even though it's very corrective and messy, you've also got this bit of price action in there as well. It just has a lot of room to develop, but you know, it's got the makeup of it. It's then tapped in, filled the gaps, done everything it needs to do, and now it's in prime positioning for a short. So then if I'm looking at this for a short, right now, if I was to get involved, I would have to arguably get involved around about 25 to 26 pips. If I'm comfortable with that, I would do that. I would take that and manage it for, you know, roughly around about 2.49, yeah, roughly about 2.5 to the bottom of that, and then playing it for a 10% trade to the bottom. I kind of like this trade idea. I mean, I wouldn't be surprised if it did develop a little bit more, but this is solid in itself. We do have upcoming news, nothing of major concern until the 29th, which, yeah, in a few days from now, we're going to have that news. So that's something that as well you'd want to be conscious of. Hey, Mac, what's going on? And yeah, I would say this is solid. This is decent. In terms of price action structure, it's there. It's just, it's a waiting game trade as well. You know, you'd take a trade like this and you'd have to be patient on it. You can't just take this trade and expect to be there by end of the week. This could take a bit longer to develop, but I do like this a lot. So that's NU, definitely a nicer one. We've also got New Zealand Swiss. Now, New Zealand Swiss is in that area too, where this is kind of a bit of your V. I would want to see this break this low, get continuation, and then you can basically trade something like that to the downside. So a trade like that would be decent, but the swaps, spreads, all of that stuff, it's not my cup of tea, so I'm gonna leave that Swiss pair alone. New Zealand CAD. This is another one that I was really favourable for. So with the New Zealand US dollar one, the reason why I wasn't in a trade already on it, not just because I'm not looking to take any live trades at the moment, but mainly because it just wasn't completed. And the way I saw it is, I'm probably seeing a lot of these New Zealand pairs gear up together. So I'm waiting for the insurance entry, as you can see, but it's not really there. It's left another gap on this one. So this one could take some more time to develop. This one looks like it's coming back down. It's going to tap into these areas, make its way back up. We then get some sort of larger structure here. We then get prime positioning here, and then that sells off. So then it just really gives me that trade idea that, are we waiting for something? And it could be some BOC interest rate decisions. Maybe that is complete, right? The odds are we don't need to come in and fill that little bit of liquidity there, because when you look at it here, this had a gap to this then filled that gap, but left the gap to this one, then it took it out, and now it's selling off. So then you look at New Zealand US dollar, and you're like, well, okay, New Zealand US dollar's done everything it needs to do. So there's a New Zealand pair that's done. New Zealand CAD, on the other hand, is showing a bit of, it's not really completed everything it needs to do, but in the sense of isolating this little bit of price action here, it's done everything it needs to do, and that can just sell off. So then you think about it, all of this is probably just a bit of an illusion at that point, where we're not really, hold on, let me just clear that off. We're not really looking at the structure properly at this point. It is already in play, the completion of the structure. So actually, you look at this is done. It's a good trade. I think this is a really good trade. Even if you took the trade in here now, you know, you took the trade there, you put it in for roughly around about 30 pips. Because even if it comes back there, it's most likely going to come up there, so you don't really need to cover it. You could get in for still 1-to-1 at this point, so you can move to break even, and then you basically just play that to the downside, and then you still can walk away with at least a 6.5, or I'd say 5%. I'll bring it up a bit. I'd say 5-to-1, and I'll play it like that, and that would be the trade. So that's one of the reasons why I do like this a lot. I obviously would have liked to have got it roughly around about there. I would have probably kept it roughly right, yeah, 27. It's not much of a difference. I mean, you're still playing about 2-to-1. You just would have had a little bit more of a refined stop on it. Again, yeah, you'd want to play that safe. 30 pips, you can get in 30 pips on that. I think if you're looking for a trade, I think that's a pretty decent trade in itself. I hope you're feeling much better. Yeah, I'm feeling a lot better actually. It's just my nose is still a bit stuffy, so you know, I'm trying to get rid of that part of the flu, but it's all good. My mindset's in sharp. My mindset is sharp. That's the most important thing. Just keeping that mindset sharp. And I think obviously operating from a place of just continuously staying in synchronization with the market developments throughout my flu and stuff. That was very important, because the last thing I wanted to do is just kind of fall completely out of sync. But most important thing was recovering. But I just didn't want to let myself get lazy, if you know what I mean. I didn't want to take my foot off the gas because of something which is going to be short term. You know, it's one of those ones where I'm not going to let the flu defeat me. It can take me out temporarily, but it's not going to defeat me. It's not going to completely annihilate my opportunity of growth. So that's the way I saw it, and I was like, nah, the flu's already gone, because there's going to be a point in the near future where I'm not going to be sick, but I'm still going to be trading. So I'll persist with trading, and then the flu can just, it can be there as like as a bad trade, and then eventually I'll overcome it. That's the way I saw it. Let's see. So we've got this low here. I think it might even near miss this low and come back up, mess about, and then it eventually comes here. It just looks like it's one of those ones where this is going to be a range. So I'll wait for this. I don't think GU's amazing right now, but don't get me wrong. If you're trying to look for a trade on it, or you're in a trade on it, you know, it looks like it's respecting this channel. Like it's really doing something like that. I just think with the news and everything in play, it's going to be a short-term trade anyway. The odds are this probably does this and then spikes up, comes up here, taps into this area of liquidity, and then eventually comes down. This becomes your bigger channel, and then next thing you know, we're down here. I think that will be it. Give me 1 second. Yeah, brilliant. All right, so yeah, that's pretty decent in terms of a sort of development in the market, because then you can see that's like the middle section for this continuation to the downside. Again, looking at the DXY, if the DXY is going to go higher anytime in the short term, we're probably going to see the sell-off, so we might not even get what we're looking at there. This could just drop off, really and truly. It doesn't need to develop. With the volatility in place and the DXY, if I just quickly go back to the DXY and just show you what we were talking about earlier, you know, the DXY comes back up to those areas, you're going to see something like GU just drop off, just drops off down here. And then within this run, you could probably get 1 or 2 trades. It could just be aggressive, but that's what I mean, like with it just dropping off, because you can see to the left here, there's not much, but you can see how they're the same, right? They correlate very well. So you can take advantage of something like that if it comes into play. We'll compare EU in a second as well, and AU, but GU as well. Keep that in mind as a variation when the DXY decides to move. You can take full advantage of it and make some money on that too. Yeah, this trade, I'm not a GJ fan right now, but that's there. You can't deny that trade's there. If I go to the 15 just to refine it and bring it closer, there is something right here, right now. Did anyone catch this trade today? Damn, this was right in front of all of us, man. This would have been a trade. If I was 100% active today, in flow, I would have looked at a trade like this and I would have been like, yes. And I would be in this trade already. I would have entered the trade on the 1 hour. Yeah, I would have been involved here. I would have got involved around about the trade about here. Stop loss. Yeah, arguably, you could have cropped it. I would have cropped it. I would have cropped it around about 15 pips. Just there. Yeah, that's nice, man. This is solid, honestly. Like, let's see. So, yeah, those buys on GJ. Yeah, trust me. I mean, do you know what? The buy is still there. The buy is still there. I would take it on like a 0.25 or less, 0.1 or whatever, just because a trade like this is worth being involved in, even if it doesn't give you a huge amount of profit. Look at what we're looking at to the left. Do you know what I mean? This is like solid. There's literally nothing. There's nothing here to stop us from just moving. That's why it's nice. That's why it's really nice. But again, saying that, market can still trap us. Market can still do some stuff. That's why I say I wouldn't go too much risk on it. I would keep it quite low risk, but I'd play it for the bigger move. But 0.2, 0.25, that moves you about 13-1, right? That's exciting. Obviously, that's just assuming that it just goes, which right now looking at it, it does have more than enough opportunity, but there is a gap to the low as well. And this massive gap down here. But boom, I love that. I really, really do like that. It's just, we're sitting on this little bit of liquidity here. We've then scooped, created a double top. And then we look at this, is this gonna sell? If we look at it for the sell, what reason would it have to sell? Let's have a little look at this. The long looks very good, but let's have a look at this for the sell. So we tap into the liquidity here. On the 4-hour, we tapped into it here. We then failed, we created a base, we came back up, we scooped up, we created continuation, failed continuation, we sold off. And then, what do we have? Are we retracing 50%? Yeah, 50% retrace. It's one of them ones. If you get continuation now, go for it. If there's, I think that insurance entry is better than the risk entry based on what we just mentioned with the liquidity to the left and so forth. Wait for that insurance entry. If you get an insurance entry, this is going to be trade of a century for you, honestly. You probably get a much tighter stop. So let's just see what that size that up is. So let's just say this then comes down, comes up, comes down. Ah, it's a bit too big. Let's say it does it here. Oh wait. Yeah, even something like that. It's still size proportion wise not the best. You'd want to kind of mitigate down here just in case of any spiking. So yeah, risk reward's still not going to be the best. Further up would be nicer. Further up would be much nicer. Trade like that, you could probably mitigate around about 12 pips. Yeah, you still walk away 15-1 and something like that. Something like that would be great. Honestly, I think this would definitely have to be on your watch list. This trade here is, mate, that is it. I actually forgot it's Sunday, and I was thinking the markets were actually open right now, but it's not. That's how sick I still am. GBP New Zealand. Yeah, definitely keep an eye on GJ, man. But you know what? If GJ is shaping up, compare them to the other yen pairs as well, and then kind of just get through whichever ones. But just looking at GJ just now, honestly, I don't see why you wouldn't want to have that one on watch. Let's have a little look at this. GBP New Zealand. Do you know what? I'm not a fan of GBP New Zealand at all, just because of how price is. The only time I would really want to be seeing this is if price came back up here, which I think somewhat is unlikely, because even if price came up here, then you'd be worried about something like this anyway, where price then develops, continues, makes its way up there, and then potentially goes from there, and then that just becomes a piece of some larger whatever. So it's one of the reasons why I'm not a huge fan of this, because of where that is sitting. I think the only time where I think if you were to send me a GN short would be you've cleared that and you've come down here and now you're trading in here and you can manage it into that point, and then you're basically positioned in here to then trade into this and this. I'm happy with that. I think a trade like that is solid. Anything else is not worth it, really and truly. GC, oh man, GC, I'm not even really a fan of this. This can still make its way higher, create something in here, and then you get a trade there. That's not so bad. Or then it fails to continue, you get a long position in there, and then it makes its way back up there. So yeah, I'm basically looking at it entirely in that area for long or short, but depending on how it's positioned and the structure. What have we got here? We have decent price action. Let me just have a little look. So previously we were looking at shorts over there for insurance. So I guess you kind of arguably got it above over there, which is decent. That would have been a good trade, that GCAD one. Broke the low, came in, broke the low, then we tested in here, came up, we retested, and we sold off. This is a brilliant trade thesis of a two-touch as well. I mean, you know, you see these ones time and time again, just not in terms of how it looks, but just in the makeup of it. So you can see that you created your base, you got your high, you got a little footprint above it, which, you know, we were looking at previously on New Zealand CAD, I believe it was. Price comes up, it looks like it's near missed this, then it correctively comes down, creates the second bottom down here, and then comes up in a phase 1, 2, 3, taps into liquidity, doesn't tap into this section where you're anticipating to, but then it sells off. And I think you see that quite a lot as well, and I think that's a clue in itself that in these particular scenarios as well, even though you need to be a bit more careful and conscious, you can take advantage of those risk entries when you have this sort of scenario. If I go back to New Zealand CAD, just go to New Zealand CAD. Yeah, even with New Zealand CAD, what we're looking at on the daily, 4 hour. No, I love this trade, man. This was solid. Really, really like this trade, and this was on my watch as well. It just wasn't available because I had to go somewhere. I really like that. But for next week, insurance entry, solid. Took this, would have still been, yeah. Let's see GP CAD again. Let's just go back to that. Yeah, GP CAD's nice, man. Like, as well, just the makeup of it. I think even like GP CAD, New Zealand CAD, if we get insurance entry now, that's solid, man. You could take something here into that low, which is nice, and you could basically manage it into that first little hook point there at least as well. But the odds are it's coming down, it's going to break that low as well. So that's great. For whatever reason though, I don't believe it's going to come all the way back up and this becomes a 1, 2, 3. It's possible, but I think just because looking at that middle section, that sharp move, this was a two-touch in the form of kind of a bit more off a V, but it was there. That's a two-touch, and that's selling off now. That's going, and then, you know, you look at the bigger picture, you're probably coming back down, man, into, it's great. It's phenomenal price action. That's your prime time. I'd get out there, but if it smashes through and starts making its way down to these areas, then you're in for a mega trade. But really and truly, my target zone is that first point there. Damn, GBP CAD though definitely was a really interesting pair there. If I just clean this off, let's just see the entry where exactly it would have been. So if I take this off here, yeah, so even on the hourly, you would have borderline missed that trade because it just shot off. If I go to the 15 minute was tricky as well because look at it there, it's hovering in that area after that impulse, so you don't even have the confirmation that it's developing into this just yet, or you don't even have the failure continuation. You don't have any of those increased probability criterias. If I go to the 5 minutes, it feels very zoomed at this point, but yeah, it's one of those ones I would have wanted to see something at least in that run there. Sometimes you don't get it, and I think in this scenario we didn't get it. This would have had to be in your pure just intuition of, okay, I understand this, that's my liquidity, this is the area. Stop loss wise, I'm going to get involved after that candle closed there. I'm going to set it down here, and I'm going to put stops. If I can manage into the low there, yeah, about 2 to 1. 2 to 1, I'll go 35 pip stop loss, and I would have played it like that. It could have been an easy, quick in and out sort of loss, but I think for somebody who's primarily risk entry focused, even within your insurance entry, risk entry focused, you would have been somebody who's like, no, this is it. We've had our clear, strong push up. We've then had an indecisive candle, which has still been a breaking candle. I can set my pending order, and then if we do dramatically sell off, great, my trade thesis is correct. If we don't and we carry on stalling and price keeps pushing higher, remove the order, wait patiently, because we could be tapping into that next area, which is just above there. But all in all, that's major. Why? Because you even break it up as well. You can see how we got in there. There was just so many clues to this. It's just, yeah, it's great. And then you had the small consolidation there, which I personally think could probably, just kind of come back up, and then we develop a bit now and sell off. On Monday, London session, Monday London session, this is another trade you would want to put on as well. Monday London session, GBP CAD. If it develops into this, and it develops continuation there, you're good. You're very good. That's weighted enough. I think what you saw at the end of the day there, that small little tight consolidation there, I think that wasn't enough to take advantage of. If you were looking at it or you did take it, I'll be very careful with something like that, because that can easily just come back and retrace on you. Monday market open. So trade like this though, if that shapes up, take this trade all day, and you can get more aggressive. Where we thought we were looking at maybe a 2 to 1, you get in with roughly even, I'll say 15 pips. You've already got more. You've got 2 to 1 to the bottom of that structure, and if that continues, you're in a much better trade than you would have been up there anyway. So GBP CAD is good. It's a good trade. GBP Aussie, GBP Aussie, man, it really started running, but not easy. There was trading there, came back, pulled back sharp. It's not really trying to help anyone make any money. It's getting to where it needs to be, but it's just doing it in the most messiest way. Now it's sitting over here, and we got there correctively. I'm going to be looking for longs. Personally, I would want to see this maybe even just wash out a little bit more, come back up, and then prices like anywhere up here. I could then take that trade, manage it into this section, but then ideally keep going. I think we could see two things. We could see a very aggressive move to the upside, a strong buy, because it seems like through previous price action and data, we've seen when price is ready to go higher, it just moves aggressively. That's what I'll be looking at as one particular type of clue for GBP Aussie, is that aggressive sort of signal in the market where bigger players are stepping in. Whereas I want to be conscious as well of retraces, but we see them usually, a pullback is usually in the form of a correction. So pullbacks seem to be, like, let's say if the dominant price action for bigger players, they're stepping in here to go long. During the pullbacks, we're not going to see sharp sell-offs. What we're going to see is more of a corrective sort of move like this. And then what's happening within there is the bigger players, institution, hedge funds, they're going to be then stalling the price and pushing it, making it look like it's going down. So more people are trying to sell it and get involved in micro trades within there. But the dominant picture is this is going long, right? But within there, we're having all these small pullbacks. That's where the bigger players are then buying up all the people trying to short, trading those macro trading patterns. But then what's actually happening is they eventually then just buy them all back up. A whole bunch of people take break evens and losses, and people lost money within there, of course. And then they've positioned themselves in a lot of buys during that little pullback. And then it's moved to the next point, and then they repeat that over and over again. And I think when you do analyze price action in many different areas within here, you'll see the exact same sort of thought process that I just mentioned. So something to keep in mind, something to bear in mind when you are looking at trading GBP Aussie particularly. I mean, obviously this happens on all instruments, all pairs in different ways, but especially on GA, it becomes more obvious once you've studied it and you understand how the bigger players are using corrections and pullbacks and price structures to position themselves. And they don't do it in the cleanest way, which is the most annoying part. Sometimes you get clean structures, but here you get a lot of steep not the greatest angles, but they do it in a very strategic way that you can then understand that, okay, there's particular value area points where price is coming in, retesting and doing things. I can still get positioned in, but the odds are I'm going to have to manage more aggressively. The spreads are quite awful. Price action isn't very reliable at times, and it can be very erratic and sharp at times as well. But again, you know, you can make money. So it's one of those ones where if you do learn it, it doesn't become the worst pair in the world to trade, but it does become a pair where you have to have a very good trading tolerance to understand that, you know, you can be wrong quite a lot of times before you're right. And yeah, it's one of those. So finally got to Euro USD. Wow, okay, let me just clear this off. So Euro USD definitely always has been a favorite of mine. Let's see, what was that? Right, so what we're seeing here is, so remember, we are looking at DXY potential longs to fill the gap. So if I just go back to the 4 hour on here, this, I don't know if it's coming all the way back down there, but I do see this little point here and a bit of a gap there. But saying that, if I pull this across, we've kind of done enough to kind of look for a long, but it's not showing the commitment of a long that I'd be looking for, because I'm going to invert this for a second just because it's easier to see. Look at this, right? Let's say that's already tapped into this. So in terms of a price structure, that's basically done everything it needs to do, okay? It came down and left a hook point, right? So that's done. Then what happened was we created our next piece of structure there, but we left a gap, right? And then we then correctively came. We then tapped into the low from this section. So that was done, right? Tick, tick. And then we started making our way higher. We can see from the angle, there's no base to this, so it makes sense why this continued higher. Some of you get confused. Why does this do that sometimes? Why does this come back up, tap into these areas, but then it doesn't commit? Usually there's a clue within the structure. If this came down here, or even came down here and did this, it's different. That's a different structure. So it's about structure identification at that point. So price came up, price then squeezed into this section here, but what did we get? We took out that gap, so that's done, but we still left a gap to that section there, right? So there's still a gap over there. So what happened? Price came back down, it sold off, right? It sold off, but with all things included, and it can still continue, don't get me wrong, if this created here, that would be more than enough for us to then say, okay, let's play that short and see where it goes. It didn't have enough momentum at that point there, and now what price is doing is seeking more liquidity in the market. So then it's coming back up, and then we're getting something like this, where again, I'm not a fan of something like that entirely. If we start to develop and then we create something a bit more like this, I would be for a trade to go long from here back into those areas, and potentially if it continues higher, but at least then it fills the gap. So then this gap is done to the left here, that would be complete. This gap is finished as well, no more gap. We've then done that, and then we can wait at that point there for price to come back in and then give us the first flag, second flag, and then we basically played this whole sequence to the downside. That could have come across quite messy, I can now see it, but I hope that made sense. So again, it's one of those ones now where you're just keeping it very simple. You've got this here, and then you're just waiting for either this to develop, but really and truly, you will then, you know, you'd mock this up on so many different ways. You'd be like, oh, okay, well, you know, I've got this. It doesn't really matter, right? All of these little variations of different squeezes into it, yeah, sure, they're little confluences, but the most important thing is we're going to see if when price taps into this area here, it's taken out all these little gaps and whatnot. We want to see it then push back in and give us a flag, right? And then we want to see more commitment, and that's where we want to see the DXY then, and that point there, remember, it's still flipped, the chart is still flipped. We want to then, I'll flip it back, we then want to see the same thing. So what we're seeing here on DXY is we'd be waiting for price to get in there, and then when price does that, that's the first flag we saw in EU, and then so forth, right? And that's the exact same way it's going to correlate, and that's how you're going to take full advantage of it. So keep sharp next week, because I think next week will probably be the week where we push up to the upside, and then we start stalling in that area, gearing up for that first continuation short. So if you're looking at a trade for next week, I'd be looking at probably early next week for the move to come back down to these sides here. So look for the continuation to complete, and then look at that play to the downside. That's basically the gameplay you want to be going for. Let's go to the next one, which was EJ. EJ did take some trades on this recently. See, so yeah, this one was a 1% trade, and then this one came back a bit loose on that one, and it was about 0.38 or something, 0.4, so this one. Let's take those off. So yeah, what we can see here is that price clearly was not, it didn't really have enough steam to come to the downside. It just retraced. We can see it's coming to the upside. This is nowhere as nice as GJ. GJ was much nicer in terms of a move to come to the upside. Right now we are kind of coming back into the area. If we look at it on the daily, yeah man, it's nothing about this is looking great. But what we can work with is price is losing momentum as we're squeezing up into these areas. So I want to see something like this, where price makes its way, hovers, stalls, and then just drops off, and then maybe we get continuation and it continues and we get something like that. That would be the ideal scenario for shorts. You'd get involved on the first continuations and then multiple within the run to the downside. But more importantly, we have to also keep in mind that that may not happen. Price might continue squeezing, and then one big candle pushes it up, and then next thing you know, we're continuing to the upside while everyone is trying to get short. So, you know, variations on variations. I'm not looking for an EU long, I'm looking for an EU short, but it's one that, again, I'm willing to be extremely patient on. There's a lot of EU news upcoming as well, so I'd be very cautious when taking a trade on this. You can see over the course of the remainder of this month, going into, yeah, there's a lot of news, really. ECB as well, yeah, just be very careful with the Euro trade, very careful. But we're probably going to see that momentum we're looking for on the DXY. So again, it's one of those. GJ, much better bet, because the Euro news is not going to affect it directly, and if there's massive volatility, at least you'll dodge some of those volatility wicks, where on some of these other pairs you won't be able to dodge it. So bear that in mind for next week as well, when you are picking your pairs like Euro New Zealand or GP New Zealand, Euro CAD, GP CAD, or whatever it is. Be conscious that one of them has a lot of news attached to it. It could work in your favor, or it could work extremely against you, and that's something you should definitely pay attention to. Euro New Zealand looks nice as well for the short. You know, we've kind of, in some ways, already completed on this. So now that's kind of like the hover. So I do want to probably see that sell off now. I don't think that's coming back up. I don't think we're going to see something like this. It's possible, but I don't think that's going to be the price action. I think we might just see this kind of just move. News comes out, spikes, and it just goes. And you're probably going to be seeing some massive sell-off, or, you know, price spikes, does its thing, comes in here, and then just comes all the way back up. And then next thing you know, that's just going to be more developed. And then you're kind of just sitting within this channel. So I think shorts are looking good on Euro New Zealand. I'm just not going to touch it because of the news. So I'm happy to stay out of that. But if you're looking at something, if I go to the 1 hour, yeah, come on, that is juicy. I hope this trade is the one that I think it is. But yeah, you know, the trade squeezing from there. If I go to the 15, everything looks good about this. You know, I wouldn't be surprised if opening we just move. So look for that retrace. If we come back up, I'll be conscious that, you know, this does that, but oh, that looks nice, man. That would have been a really good trade. I don't know if any of you took that, but that would have been a really good trade if it wasn't end of day. Yeah, I like that a lot, to be fair, because it's kind of just tapped into that liquidity, retraced as well, and then it's consolidated, clear as day on the 1 hour as well. 1, 2, 3, 4, 5, 6. Yep. And let's see on the 4L. Yeah, even as a 4L play, I'm not going to take that trade anyway. Just analysing and looking at it, it looks pretty decent. I like the fact that it's also through the low as well. I like the fact it's a hover. And the middle section's not the best. It's not the best middle section. Yeah, this could still be underdeveloped. You know, if it is that, then fair enough. You might be able to take advantage of, you know, the run there. But I wouldn't be surprised if this sells off. So I'd keep an eye on EN. I just would bite the bullet on it because of the reasons of news. So just be careful of that. EG, yeah, EG. This is the one we were saying we're waiting for it to come back up to these areas. Once it takes out those highs, you could probably get prime positioning. So now we're finally making it. EG might eventually make it on watch. So with news next week, we'll have to wait and see how price responds. I'll probably let the news week kind of do its thing, get up here, push back in, and then by the end of the week, we're probably in these areas, and we can just really take advantage of shorts. That's what I'm going to be looking at. But all things in mind, it would be one worth having on watch, just to kind of monitor and analyze. If there's a trade in there, you can take it with low risk. I wouldn't say just not take the trades entirely because of news. I would say if you're going to take them with caution. Don't take them like 10, 20 minutes before news release. It's just a very risky situation. I would say if you're going to take it, just price in the news and mitigate it with additional stop loss and lower risk. And that would be the best way to approach it. And then just accept the loss and make sure you're in a position to take the loss if you're going to take it. Eurocad. Oh, Eurocad is very interesting. I mean, the CAD pairs all along actually have been pretty decent. It's just, we had this trade here as well, which was exactly as we wanted. Let's see, I didn't take advantage of this, but I know I had it marked up, which is interesting. So we were looking at correction in that area there, which we did get. It was steep. Ooh, I don't think I would have, oh yeah, right here. Right there. We would have arguably seen that as two bottoms. That would, yeah, I wouldn't have taken a trade on this. Even though I had it marked up the way it played out, I wouldn't have taken it because I would have seen this more as a footprint. This was kind of the base, and then it was coming back up. I wouldn't have taken something so steep within that. I would have waited for price to potentially come back up here, and then within that section there, I would have been positioned to go short. So that would have gone off without me, all things included. And then even with that little bit of price action, I would have let that one go. So definitely no trade in there for me. But saying that, I'm looking at how price is developing now, and it looks like we could be developing into something. I'm not a huge fan of this. I don't know about you guys. Do any of you have EC on watch for next week? What are you guys looking at on it? Because for me, I think GBP CAD and Euro CAD, New Zealand CAD are way nicer right now. So I would be more in favourable for one of those, especially with Euro News actually looking at this. I'm happy to write this pair off. I think New Zealand CAD's definitely the go-to from these CAD pairs. Euro Aussie. Yeah, similar boat to GA, to be honest. I mean, obviously I've got a few more little lines on here and stuff. Let's clean that off. Oh, the trade did play out though. I think we marked this one up here as well. Yeah, this was solid. We had this little steep flag and it did follow through, which is interesting. But it came back, it retested as well, which is good. That's decent. So that was the trade idea we were looking at. I mean, now we're all the way down here. The odds are this just continues moving in its really ugly sort of channel. And then now it sells off, comes back down, does a bit of a miss, then develops, and then it sells off and it's still part of this channel. and then you get your next trade in there to then play there, and then you're holding in a trade from here. You're going to be holding for some time. You're going to be holding until the end of the week. So it's one of those ones where, you know, this is Euro Aussie, so with all the news included as well, it could play with you or against you with swaps and all of that. Be careful, spreads. Swiss yen, man, Swiss yen, relentless for the longs. Just not easy to get involved in a lot of the time, but it's there. It really is a good instrument to trade for longs. Seriously, it's just, it goes when you least expect it. Aussie 200 AUX. That's yeah, we're coming to Aussie 200. I love Aussie 200 too. Aussie 200 and New Zealand US dollar. Aussie US dollar and New Zealand US dollar, 2 pairs. Swiss yen. Swiss yen needs a bit of development. I would wait personally. I would kind of have that marked up, wait for it to create a bottom, and then make its way, do whatever it needs to, and then maybe a trade in there from an insurance entry. That would be the trade that I would look at. That's the one I'll take. So yeah, so that would basically be it. CAD yen for the long. Similar to GJ, I would wait. I would let that create a base. If that comes in, it creates something in there. You can then take that. But looking at it from the 4 hour, I don't think it's going to create the way we just wanted it to. I think what we do, we'd see it as it's really tapped into this. The odds are you've got that as your high. That was your base. It doesn't really need to come in there because it's basically done that. So it's basically done everything. I think you might see something in there short term, and then you take your trade here, and that's your long. So you wouldn't really have to wait for much. This could go Aussie session, market open time. I would mitigate a bit with extra stop loss. Personally, I would go with roughly around about 15, just to kind of cover that little bit there. For whatever reason, you know, you can see how nature is. It wicks, taps into random bits of liquidity, so you'd want to be extra careful. 17 to be absolutely safe, and then you basically play that into the high. You don't really have a one-to-one at that point, but borderline, you would probably still be able to manage that, and that would go. And if that does go to, you know, that high there, you're still playing about 3-4 to 1. So yeah, it's okay. It's okay. GJ more preferred, but CJ could shape up sooner. Okay, Aussie US dollar. Oh, you know what? Aussie US dollar's gapped. Wasn't expecting that. I wasn't expecting it to gap. But let's have a little look. So we've got this bit of price action here. We've got this here. Let's even say if we're looking at like this, yeah, it's still left a gap. So it still needs time. So actually, this gives me a bit of a clue with New Zealand US dollar. I was looking at a New Zealand US dollar short. But if this hasn't really done what it needs to do, and also the DXY, Euro USD, GBP US dollar still have a little bit of a pullback before they go into their continuation, it could be a clue that we're not ready. So I'm going to be patient. I'm going to be very patient, and I'm going to align my pairs, and I'm going to wait for them. Because, like I said, I'm just going to go to the DXY again. When the DXY taps into those areas and it shorts off there, we'll probably see Aussie US dollar come back up into these areas, and then Aussie US dollar will be in those areas. And then what will happen is when the DXY turns around, Aussie US dollar will start to turn around as well. That's when I'll be looking to get involved. So most of my attention and focus will be set on the DXY for this. That makes sense, you know. Then I kind of have, you know, a bit more to work with. It's kind of taken out the liquidity. It's even retested this. It's done a whole bunch of more things that add on to the confluence, and it makes it a lot better. So a lot of people can get caught in and out. So I'm going to apply that same thing to New Zealand US dollar. So what I said earlier about New Zealand US dollar, and I'll go back to it. I'll take that back now, seeing all the data, and taking a position in here may not be the best idea. I think the best idea would be to wait and see what happens. Let the DXY do its thing. Let this come back up, comes back up into these areas, and then boom, just sells off. And then you can take advantage with Aussie US dollar, pick between it. I like New Zealand US dollar as well, so I like them both. I prefer Aussie US dollar over New Zealand US dollar if I had to pick one, but Aussie US dollar probably will commit better. So I'll be looking at both anyway. But yeah, then you've got a clear run into those lows there, which is nice, man, beautiful, absolutely stunning. Absolutely stunning. Maybe even US dollar might make it. Split the risk on both, who knows. But yeah, that comes up, comes back in, gives me a trade, and then I'm trading it back into those areas there. Still phenomenal runs. These are the sort of trades that really make your portfolio. I'll definitely look at gold. Aussie US dollar, Aussie yen. So Aussie yen again came in with another gem of a trade there. I wouldn't be surprised if that came in one more time, tapped into that area and went. There was a trade here as well. There was arguably a trade in there. And then I was looking for the trade there. We didn't get that. We actually got it further up. But again, you can see, if you haven't already seen these trades, you know, if we look at that, there was a trade there and there's a trade there. That one's already shaped up. If I look at the one on the 15 here, obviously this one here, you can see what I was looking at. You've got your little reference point there. You've come in with, you know, angle like this. And you can basically see it there. Because the reason why I didn't include this one, because this was kind of a piece of its own, but then at this point here, it's tapped into the high there, but it's not responding in the same way. So this was like its own piece of price action. That was its own, it went, and then you had another bit of price action there where you could take advantage of another trade there. And then over here, arguably you've got your little footprint, and then you've got this little bit of price action there. So if I just remove this and I remove this, you can then see what I'm looking at here is pretty clear as day. You can see that, you know, we've got the squeeze comes in here and then it goes. It's just repeating itself over and over again in different variations, but trades on trades. I would personally really want to see this kind of just not come to the high, sells off, taps into this and then goes, right? And then you can get into the trade there. Not worried about this little piece of liquidity there. It's possible it just sells off aggressively and comes straight back up, insurance entry and goes as well. But we can deal with it where and when. It's just looking at all those pairs. AJ and GJ look much, much better. CJ looks like the next one in line because it's closer to shaping up. But yeah, I mean, that's pretty much it really. And then Aussie New Zealand. Let's have a little look at Aussie New Zealand. Yeah. Aussie New Zealand's pretty crap. Let's have a little look. Right now, it's not looking too good. But, you know, pairs can change quickly. And when they do change, you should be ready to pivot with it. So let's have a little look here. Yeah, I'll be honest with you, I'm not a big fan of Aussie New Zealand at all. Strike rate wise as well. Haven't really had the best strike rate in the world with them. Maybe one day I'll go through my trading journal. We can see all the trades I've ever taken on Aussie New Zealand. And I'll be honest with you, they've not been amazing. But if I isolate this in itself, look at the sequence, how it's moving. You know, we've got the high, we came back, we broke above, retested, failed. That would have been your bread and butter trade right there. Trade it into the low, you would have made money. Sharp pullback, came back, retested this area. Again, failed to continue, sold off. It's just really messy in its own way. It then came down, failed to continue, came back up, retested. It's come back, scoop. Probably gonna sell from here and come down now. If we're following the pattern of this overall sequence, this is probably exactly how it's gonna play out. It's probably gonna do this right now, which is kind of funny, man. You feel like some sort of psychic guru when you see stuff like this, but it'll create continuation here, it'll fail, and then it will just sell off and come down here. And then what will happen, it will still be respecting within that, and that would be the case. Best scenario in terms of price action is we come back up here, we do this, we fail, and then, you know, we have something like that. We get a 1, 2, 3 into it, and then we're here, then we sell, insurance entry. These are things that we want, but we don't always get them. And then you'd have that. But then again, this is coming from a squeeze. It's just such low probability that, again, you're asking for so much in a very messy corrective market cycle. You end up putting too much focus and energy waiting on something like that. You end up making no money. You end up wasting your time monitoring a pair that doesn't need to be on your watch list, analyzing it, forecasting it and stuff. That time is worth a lot of money. And for me, I'm not going to waste my time on something that has a long shot to get developed and probably give me a low risk reward with still a level of moderately high risk attached to it, because At the end of the day, Aussie New Zealand hasn't had a high strike rate for a reason, and there's times and places you want to take it. There's certain times where it does give you a pretty decent risk reward, but for me, you know, I'm always finding myself finding better pairs and better worth risking my pair on pairs which are pretty much the major pairs. Major pairs have definitely performed a lot better than some of these minor pairs, and especially the exotics, of course, but keeping that in mind. Aussie Swiss, don't really see much on here, to be honest. Aussie Swiss could develop into a lot of things, could even come back down. You know, I'm not really in a Swiss mood these days. Past 2 weeks, there's not really been much Swiss stuff. Yeah, I'm gonna leave Aussie Swiss and Aussie CAD. We did Aussie CAD at the beginning, but I'll just cover it one more time. So this is looking like it could be a continuation to go long. Right now, we do have a bit of accumulation in this area, so if we did have a bit of a washout, I wouldn't be surprised. And then we kind of move higher. I'm definitely looking at this for the long because we've got a clear point up there. If I go down to the 4 hour, even though we're kind of accumulating here, what have we come from? We've come from a correction. So we've gone correction into a correction. We then got a bit of liquidity to the bottom. Let this spike, let it come down here, push back up, insurance entry, and then go long. And then basically play that, and that will be a beautiful trade to the upside. And you would be so happy you got positioned in here because you basically got a massive run to the upside. And then you're basically playing off the volatility of everything within this run to the downside. Because remember this, right? If you trade middle sections, what does a middle section consist of? A middle section consists of corrective price action. Sure, sometimes the corrective price action can be a form of a flag or channel, but look at this overall section here. What is that? That's overall corrective. So see it for what it is. That's your middle section. So now you understand that, okay, well, we've got our footprint, we've got our base near miss, we've got our 1 top, 2 top. All we need now is to see a middle section. What do we have? We have a middle section now. Now that we have the middle section, we need to wait to get the entry and we go long. And then you're in for a pretty decent trade. So that's one that you definitely should be keeping an eye on as well, because that could form extremely profitable. So that kind of wraps it up for the currency pairs. Quick scan through the indice pairs. Before I go into that, I'm going to just jump onto gold because it was requested. So listen, gold is one where it's extremely overvalued at this point. There's a lot of talks about, for example, America, not just America, but using America as an example, going into digital currency. Now, if they go to digital currency, they want to write off a lot of their debt. Obviously, I'm just reiterating what I've heard. Nothing that I'm saying is facts right now. They want to move over to digital currency, and if they move over to digital currency, what that means is that they will write off their debt, and if they write off their debt, it will devalue the US dollar. If the US dollar gets devalued, they can then increase the value by leveraging the gold reserve. So by leveraging the gold reserve and how much gold they have, they can then reevaluate what the dollar's actually worth. And what do we know about the US dollar decreasing in value? Gold usually increases in value. So when gold increases in value, the dollar depreciates, in theory, right? But now if you look at it as recalculating the value of the dollar, and we look at, for example, them turning into a digital currency, we then come to the conclusion that if they have a large gold reserve and they want to leverage that against their new currency, and gold is priced extremely high because the DXY declined before it happened, what that means is that the dollar value would actually be even more valuable as a digital currency because they're leveraging it against their gold reserve, which means gold price will be very high and the digital currency of the US dollar will be very high. So there'll be a moment in time where we see some sort of major crash, but then we understand that it's all going to work in the favor of the US dollar in the end anyway because of how it's strategically placed, and they write off all the debt. So Donald Trump's already been putting things in place like writing off a lot of student debt and things like that. So I can definitely see things like that happening. Just a quick drop before I go. Took off silver short, used the mechanical management for 2 or close to 3%. Can't recall. Let's have a quick look at that. But just kind of finalizing the gold because that question was asked. I wouldn't be one to look for shorts, and I wouldn't be one to look for dramatic longs. If I was, I would have to be in and out and pretty smart about it. I would mark up the low here, And then I'd basically just mark this on here, and then I'd be conscious about if I got something like this, I understand it's come from this, which has failed, and then I can trade it into there, see how I can manage it into these areas here, and then if it continues, great, but it's probably not going to sell forever, so you'd have to then manage it and spend a lot of time managing it. So if you have that time, you're good. If you don't, be careful, man, because it's not worth it. Silver probably in the same boat. Silver's nicer though, like from a technical perspective. Obviously when I'm zoomed out, it's just a small dip in the market, but you can see it's cleared all of this. It's already accumulating here. It comes down, that's your middle section. It comes back up, you've got it here. If that then shows signs of candle confirmation, you can then take advantage of this to then go short. Right, it is nicer, but then the odds are, in terms of a retest, it could come back up and wash you out before it does it. With gold is basically borderline positioned where the retest is. So this can come here and your stop loss can be there and you're protected within that one trade against both scenarios. With silver, you're not protected above both scenarios. You can either get protected above the structure and get taken out and then get re-entered and then get involved for the trade, or with gold, price gets there and you get involved, but you're protected in both scenarios. So you can see that in terms of risk would be the same, but in terms of risk protection, in terms of the trade idea, gold would be better risk protection. But in the overall picture of what's actually happening economically, they're both high risk. So I hope that kind of made sense, because you can see the variation of both scenarios and how both trades can apply different levels of risk, even though they're the same trade idea, but they're positioned slightly differently, and they both could do the same thing, but one could move a little bit more liquid than the other due to, call it a liquidity grab, if you will, to go and seek that liquidity to then move lower. So just bear that in mind. So I did cover Euro USD and USD Yen. You would have to go to the beginning of the video. You can actually scroll back on these lives, which is great. So if you go backwards, you'll be able to see USD Yen at the beginning, because I went backwards through the currency pairs, and then you can see Euro USD towards the end of that section, but you can kind of skip through it and find it. They were pretty simple anyway. And I'll just quickly scan through the indice pairs. Indice pairs. Let's have a little look. So indice pairs in a whole, this is exactly what we were saying before about JP225 and why the JP225 was a solid sell from that gap fill. If I go to the 4 hour, you can see it. Oops, let me take that a bit off. You can see it here, right? We had this gap and we were basically trading up here somewhere. And we said the odds are with all of these yen pairs, we're probably going to come down and fill it. Your trade was literally right here. That was your trade. And I'll just go to the 15-minute. Yeah, perfect little trade. Honestly, that would have been the trade. Reason being, look, you've basically tapped into this. You've got your low there. You've got your gap here, okay? And then arguably you've got your low down there. What happened is we failed to create continuation, right? This failed. At that point there, we understood the failure. We then had no signs of it continuing. We then had a low here, but then we created continuation through the low, trading into the next point. We smashed through it. We came down to the low side here. We retested, and then we continued following through. So in terms of a risk reward profit sort of area, let's say you took it on the 15-minute, right? Let's say you took it on that 15-minute there, which is borderline in the middle of that structure, which is fine. You took it for around about 23 pip stop loss, which I think would be more than sufficient, or even 20, call it 20. You know, at this point here, even when it was running about 3%, you're not going to be aggressive. You're playing the gap fill, so you're going to be lenient. You can even lock in around about 1% if you really wanted to. I would have said break even, keep it just above break even, locking in whatever sort of spreads, swaps, whatever they're charging you. Keep it at that point. And then basically when it came with the gap fill, you know, that was a 10-1. At that point there, you then have a solid decision if you want to be aggressive or not. It did persist to kind of follow through for an additional 3 or 4%. I think personally, when it rocked down to roughly around about 10.8, whatever, I would have been aggressively left it there and then just said whatever happens, happens, and that would have been a solid trade. See you later, Kron. It was a pleasure. So yeah, this is very, very solid. Oh no, sorry, Zephyr. See you later. But yeah, in terms of mechanical management, you took the short on silver. I think mechanical management's great, man. I think the short terms are holding these trades over the weekends are not good anyway. Just mentioning on gold and silver and commodities as a whole. If you're holding them over the weekend, they're not the best, because there's a lot of things happening economically. There's war, there's Trump tariffs, there's a lot of negotiations on going to digital currencies. There's a lot of things happening economically that can really shift things on the markets, but we can still take advantage of a lot of things when these sort of news situations take place. It's just more of a situation of not holding on the sake of trying to get rich on a prop firm assessment over the weekend, and then news comes out, and then you take 3, 4, 5% slippage, and then suddenly the people are like, well, sorry, we can't do nothing about it. You were in the trade and you took 5% slippage and you had 1% risk on. That is what it is. So they make money off people like that. That's why in times like this, you're probably seeing massive discounts on prop firm assessments and things, because they know more people are going to lose money. More people are more greedy and they see impulsive markets. They're trying to get involved. Is what it is. But anyway, that was just JP225. S&P, do you know what? S&P is doing phenomenal, man. New all-time highs, I believe. Yep. Look at that. It's a 15-minute. We'll go to the 1 hour. Look how beautiful that is, man. I'm holding S&P 500 longs as well at the moment. I'm up around about over 10k on my portfolio for it, so I'm pretty happy with S&P so far. I'm gonna keep letting that ride as well. Looking to scale into it later on, but very happy with the performance of the S&P right now. Like I said, with the speculation over this digital currency stuff, I really don't know what's going to happen with the S&P over the foreseeable future. It could have a massive dip, may not. One thing that I was looking at is, you know, you've got this little price region there. If we do have this whole craze on the 28th or 22nd or whatever it is, where, you know, we get this digital currency nonsense and price does just dip and comes down here, through all of this, I'll be selling all of that craziness, and then when price comes down into those regions, I'll buy it again. I don't care. Even if price continues and drops here, and then price continues and drops down there, I don't care. I'll just buy here, buy here, buy here, because at some point price is going to come back up rapid, the same way it recovered. It's going to come back up rapid, and then we'll be up there and I'll be laughing. And that's basically the way I see it. So just want to kind of point that out, where and I'm talking about longer term investments. I'm not talking about CFDs, contracts for difference like prop firms and stuff. I'm talking about investing in ETFs, equity funds, and just positioning yourself on those. In terms of short-term plays in this, that you're in all-time high territories. So no matter what happens in these areas, you just have to trade cautiously, because you get dips in these areas where people get washed out. Price dips and then recovers, dips and then recovers, dips and then recovers, and the next thing you know, it's all the way up here, and then you're thinking like, oh, what did I miss? How did I not get involved? That's why it's good to be a long-term holder in these situations, in particular instruments. Yep, US 30, Aussie 200. Oh man, I love Aussie 200 for its sort of lower time frame trades when they shape up, and I could find like phenomenal trades when it taps into like these areas and so forth. Right now we are situated in an area where I'm almost certain you want to be very conscious and careful, because we come in here, comes down, taps into this, and then it comes back up, and then next thing you know, this is the structure. So we came from a failed continuation here, now we're channeling to the upside. You want to be a bit careful, but I think a short, that sequence there is the one I'll be looking for on Aussie 200. So until that, I'm not looking for nothing. Germany 40, my good old friend. You know what's funny, actually? I found my old YouTube channel from 2015, and it's so funny when I go over some of those old videos I had. You know, you'd see loads of crazy stuff like trend lines like this, which is not wrong, But then also within that, I would have like, you know, so many little zones. I'll have zone 1, zone 2, zone 3, zone 4, zone 5, zone 6, and the chart would just be crazy. And then within that, I would also have this, and then I would have something like that, and then I would also have like all of these things. And you can see how the chart's starting to get a bit messier, right? The chart would get so compounded, and then I'll have like moving average on it. Then I'll have my oscillators down here. Yeah, it was just like crazy. What I'll do one day is I'll bring that up. We can all laugh together. But yeah, so Germany 40, nothing really there, man. I'm not looking for anything in particular. It does seem to be within a bit of a range right now. So with the way price is moving, I will be extra patient. Let that do its thing. Maybe comes down here, and eventually, when it makes its way back up, you can take advantage of something like that. Right now I don't think it's clean enough for me to want to take full advantage of this particular pair. UK 100, all-time highs, are we? Yep, all-time highs. Damn, man, you know what? I should just focus on indice pairs. Just trade indice pairs. The volatility is just very bullish at the moment. It's been very bullish for some time. In a bear market, you can just keep shorting. In a bull market, you can just keep taking advantage. It's that level of patience, though. You know, you can just focus on 3-4 indice pairs for a quarter, and you'd probably make more money than swapping pairs all the time on currencies. But yeah, right now, all-time highs, not much to really report on. Daily, HK 50, same situation. It's not all-time highs, but it's making its way higher. So I wouldn't be surprised if, you know, you get something in there and then it makes its way and continues higher. Or just sharpen moves. I'm not going to go through the rest of them because I don't really see much on it. Let's see. Commodities, gold, we did gold. Let's go natural gas. Natural gas. Yeah, natural gas is moving sideways, but I think natural gas is going to do some crazy stuff with us, man. I think with war and everything, gas prices might get suddenly very expensive, and then they just shoot up. So I bear that in mind. I'm not saying buy it, but I'm just saying keep an eye on it, because when they do pivot, it's worth getting involved. Oil prices are still declining, but it's declining in a very corrective manner. Are we gearing up for a strong buy? That's a real question. I would wait for price to tap into that low and then see how we respond. If we get insurance entry, I'll play that insurance entry. Why? Because it kind of looks like if this was going to be a corrective channel, which it is, where is it trading into? This would basically be the port of call, and then we're basically double bottoming at it. So an insurance entry here would basically be like the best scenario for the long. So you'd basically play that, comes in, you get the insurance entry and it goes, and then any other trade after it is still high probability as well. And then next thing you know, price is just making its way higher, and it's done, because it's been stalling in this area for 2023 until 2026. Wow. Yeah, so the real question is now, how much longer will we be in this area? Yeah, we're obviously gonna have to wait on this. We've got the low right here. If I go to the 4 hour, it's left a gap, which is fine because we've had a strong push away. We've then invalidated the idea for shorts at this point here. We've come across the retest. We now need to show that we are not responding. So it's two ways. This becomes some sort of failed continuation here, sells off, you get continuation and that sells, or this then breaks above and gives you continuation above, and you take advantage to go long here. So you go long there, or you go short in here. Those are the two scenarios that I see right now, where I like the short, because then if I play the short, I then wait for it to get to those areas, and then at that area there, that's when things really start to get interesting for the longs. So I'm going to wait for that. UK oil, same situation most likely. Yeah, it's the exact same situation. It's just needs to come in down there for me to really get involved. Palladium. Not seeing much on there, to be honest. It did move quite a good amount, but I think this is a very undervalued instrument as well. Like a palladium around about 6, 7, 800 for a long-term hold is good. You know, you get involved in long-term holds there. Palladium back, like think about it this way: if you got palladium around about 1,000, you know, it's could easily move back up to these areas over time, around about 2,000. So you still double your money, but yeah, it's not really the one. Let's have a little look at platinum. What the hell? Did I completely miss platinum? No, it's been up here for a while. Yeah, platinum shifted, man. Platinum is an expensive metal as well. So again, it's like copper. It's just hovering in this new area. I would wait for something to maybe it develops, maybe it goes. I think platinum's still a tricky one, and spreads last time I remember are pretty awful in it. This looks like it's recovering back to all-time highs. Man, copper's on some sort of mad run at the moment. Came all the way up here, sold off aggressively. What the hell? That's a big sell-off. That's a huge sell-off. It went all the way from 5.8 to 4.4. What the hell? Am I inverted? I must still be inverted on my chart. There's no way. No way. What the? I remember when copper went from here to here, but look at that sell-off. Yeah. No, I must have already seen that. I just haven't looked at copper in a while. It was all the way in August, but yeah, still looks like it's recovering. Insane amount, man. That's slippage would be awful, and I feel sorry for anyone who had to experience some level of slippage on that. Yeah, nothing on coffee either. I think coffee has still got a lot of long in it. I think it's just not looking the cleanest right now. Cocoa, corn, cocoa. Maybe a cocoa long, possibly now back in these areas. I'd wait for price action to really turn around. Corn though, I think corn could be making its way long for next year anyway. As a recovery, it's not looking too great. Let's have a little look. So we've got pretty much pinpoint that area there. The recovery, we have got a gap to the low as well. It's a big structure, so it doesn't really need to be perfect right now. Yeah, there's trades in here, man. There's definitely some sort of price action that you can work with on a pair like this. You've got liquidity right there, right, that you'd be conscious of, but it looks like we're trading into it. So there was a trade here. There's that arguably with a gap there. Man, I wouldn't be surprised, really and truly. Or worst case scenario, you don't get any trade now and it just goes here, taps into this, gives you continuation and just sells off, and then fills all of that. You take advantage of a trade like that, that sequence there, decent. Yeah, I wouldn't be opposed to that, because also looking at how prices got there, you know, a trade here would be higher risk, better risk, lower risk, and then you know, you're asking for middle section price action there. But even so, still very happy. I think corn could definitely be one to be keeping on there. Wheat, now I know wheat always comes in with some goods. Yeah, same situation with wheat right now. Now you've got the liquidity sitting there. I would wait for that to be failed continuation. Price comes in and you go in there, you go short. Or if price continues, you should basically play it from that area there and apply the same methodology to that section there. Soybean, Soybean is, it's not nice at all, man. Soybean's just, yeah, I'm gonna leave soybean alone. Sugar, last one. Selling off, it is selling off. You've got this little sharp point there. Perhaps maybe we could see a turnaround on sugar. Perhaps there could be some sort of reaction from that area there. If I just invert this, yeah, I would wait. I would see if you get this. Price pushes back in. You get something in there. You know, you got your one trade there. You got a trade there. You trade into that section. That section. Yeah, it's not bad. It's not bad. Sugar's decent as well. Sugar's definitely coming into that area where I would be conscious about a trade too. So it's quite a lot of different price action on a lot of these pairs. I think next week I'm really favorable for a GJ. GJ could be an interesting one. Also, if we go back, what was it? New Zealand CAD. Yeah, New Zealand CAD as well. Oh. New Zealand CAD. But we'll see. We'll have to wait and see, man, because at the same time, we do have this little point there, which it does make you think, so you could even get the trade in here. That would be much better. You play it, but you know, like we said, we don't need to. We have more than enough at this point, even with the retrace being there, that being the trade. Still some decent trades. But anyway, guys, I think that's it. I'm gonna wrap up the video here, and I hope there was a lot of value on this call. And yeah, I'll catch you guys in the next one. Take care, guys. Thank you. See you later.